India's GDP has grown at 6.2% for quarter 3 of this financial year. This is the October to December quarter where India's GDP has grown 6.2%. Now remember, this is a sequential growth from quarter 2. Because in quarter 2, the numbers were muted at just 5.6% growth. But when you look at this data on a year-to-year basis, there's been a decline from Q3 of FY24, where the GDP growth print came in at 8.6%. Now, the revised estimates for FY24 have been released at 9.2%, which means the Indian economy last year grew at 9.2%, and there are also revised growth estimates for FY25, the ongoing financial year, where growth is estimated to come in at 5.6%. So today we try and understand, is India's GDP growth on track? Because if the revised estimates for FY25 stand at 6.5%, then Q4 will have to draw some magic in terms of the GDP growth print. Now, in quarter 1, remember, the GDP of India grew at 6.7%, followed by a 5.6% growth in quarter 2. The latest data shows 6.2% in quarter 3. So 6.7%, 5.6% in quarter 2 and 6.2% in quarter 3. So what is going to be the magic number for quarter 4? Well, the back of the envelope calculation tells us that if India wants to grow at 6.5% for the whole year, then quarter 4 data will have to come in at 7.5% for quarter 4 to reach the annual target. Mithali Nikore, the chief economist and founder of Nikore Associates, joins me this morning. Good morning, Mithali. Thank you for being here with us while we are celebrating the quarter 3 growth on a sequential basis, as the data shows that we have grown at 6.2% versus 5.6% the previous quarter. The story on a year-to-year basis is not great, and then this leaves us with a big question mark on quarter 4 if we need to achieve the 6.5% annual growth rate.
Absolutely, Karthik. I think, first of all, let's just again, keep on reiterating and, keep on keeping the investors updated about these things, that at the moment, India is still the fastest growing emerging economy in the world. And I know I say this line almost like a parrot in every show and in every discussion we have, but it's important to keep this in mind because of the global scenario, right? We've seen the amount of uncertainty that is enveloping the world right now when we look at the different conflicts, when we look at the Trump tariffs, when we look at, the trade relationships that are going on. So I think the first thing to keep in mind is that despite all of these uncertainties, there's a fundamental strength to the Indian economy, which is related to the amount of investment that's coming in. I mean, despite everything that's happening, right? We are still seeing Tesla, for example, express interest in coming into the Indian market and, investing to capture the Indian consumer base. So, that shows us the perceived strength and, of course, the real strength of the Indian consumer. So overall, in terms of structural factors, we are still very strong. However, what we are experiencing right now is what is called a classic cyclical downturn, right? And it's not even a downturn. We are growing at 6.2%. I mean, it's literally a reduction in the growth rate because of global factors. I mean, one of our major growth drivers is exports. And, looking at the export markets, looking at the trends in the export market, looking at the tariff scenario, definitely it's going to hit our, exports at the moment, and it's going to hit our integration with global markets and, the investment that's coming in from global markets. So as we see these global uncertainties unfold, India cannot be immune to them. And I believe that this is one of the major reasons why we are seeing a slight slowdown in the growth. But when we look at the domestic market, that's still fairly buoyant.
All right, I hear you, Mithali, and I hate to be a naysayer early morning on a Monday when we're just starting the week. But my real question is about the estimated 6.5% target for growth for FY25. This leaves us with a simple question mark that if you look at data, Q1 6.7%, Q2 5.6%, Q3 6.2%, simple arithmetic will tell us that for Q4, we will need the economy to grow at 7.5%. Now, the high frequency indicators are suggesting there is some buoyancy, but if you look at the quarter 3 earnings of companies, it doesn't show a very positive and doesn't paint a very rosy picture. So my simple question is, to achieve the 6.5% stated growth rate, which has actually been increased from 6.4%, the Indian economy in Q4 will have to grow 7.5%. How do we grow at 7.5% given all the global turbulence that you talked about?
No, absolutely, Karthik. I think, see, this is where we have to change our outlook a little bit. We have to change the way we are looking at economic growth as a country. We have to start looking at decentralization of growth over a longer term rather than looking at just the quarter growth that we are achieving, right? Because for 10 years we have grown continuously. Now there will come a period where, with this global turmoil and also with cyclical factors, we may not be able to grow at above 7% or above 8%. We may be able to achieve only a 5 to 6% growth rate for the next 2 to 3 years, given the current global scenarios. Maybe that is going to happen, but at the same time, if we continue to invest in structural factors which will decentralize the growth, which will create growth in newer and newer urban areas, which will strengthen the agricultural economy, which will create more and more climate resilience, with these fundamental factors, we cannot go wrong. If we invest in infrastructure, so with these we will not go wrong, and we will still continue to see a decent healthy growth rate of 6 to 6.5%, or even 5.5 to 6.5, in my view, is a healthy growth rate given the global scenario.
Okay.
And if we invest in the right sectors, we
So
can achieve
what are the
this.
right sectors? You mentioned agri. Of course, agri happens to be not just the right sector because it's a large contributor to India's economy, but also because it's a great political constituency for any party that rules across states and in the center. But in addition to that, we've seen that the government has not really utilized its entire capex allocation as well. What is holding the government back from going ahead and building more roads and highways, which will add to the investment part in the GDP equation and also lead to employment, which should in turn lead to consumption? We've seen that the capex story has witnessed a bit of a slowdown when it comes to the government.
Yeah, absolutely, Karthik. And I think one of the major reasons for that is that the government wants to now use its capex for leveraging private investment rather than just going ahead and spending on pure public sector investments. I think the future is really.
Mithali Nikore there. We will try to get her back. Mithali, I believe you're back with us. Yeah, we're talking about why the government is not unleashing its purse strings and going ahead and building more infrastructure.
Yeah, so I think, Karthik, what is happening is that the government wants private sector to come in more and more, and have more and more public private partnerships as opposed to just pure public infrastructure plays.
But
So
Mithali,
they
again,
want
for
to
the
have.
private sector to come in, the RBI will have to continue with its rate cutting exercise. We have seen a 25 basis point rate cut, but inflation still hovering well above the 4% mark, which is beyond the RBI's comfort zone. And are we trying to oversell this cost of capital debate that becomes a bottleneck for private sector to go ahead and take debt and make investments? Or is there a real consumption slowdown as well? Because data on consumption also doesn't seem too good.
So exactly, Karthik, and this is where the government needs to come in to break this, a chicken and egg situation. Because at the end of the day, unless you invest in the newer cities, and which is what is happening in, say, an Amravati, right, where the government is coming in to back up and provide the basic infrastructure so that they can attract private investment for, high level infrastructure, high value infrastructure, even education and health infrastructure. But the government is providing basic roads, water, sanitation, etc. That is the correct model that we
Right.
need to see in more and more cities. So
All right.
certain state governments really coming in, but others need to follow.
All right. So that means we will continue to be in a supply side reform mode if the government wants the GDP target to be achieved. And the heavy lifting, like we saw in COVID and post-COVID recovery days, will have to be done by the government unless the private sector sees some value addition in the consumption story in India and goes ahead and makes those investments.